am very happy to be sharing with you what I do on a day-to-day basis, how I trade. I have actually an example from today's trading. So we're putting our money where our mouth is, and so happy to be presenting here today. So today I will be talking about the power of technical analysis to capture big profits, and I'm not talking about small profits. I'm talking about those big profits and having the patience to wait for these big profits. All right, so Renee, thanks so much for the introduction. So as you know, I am a professional independent trader focused on equities and futures for the last 14 years. I come from investment background, so I do have banking experience and trading experience. I'm also the founder of TradeOutLoud.com. And for those of you that are new to Trade Out Loud, make sure you visit our website. It is a trading education firm specialized in educating individuals how to day trade and swing trade the equities and the futures market. I'm also the designer of an institutional proprietary trading system that is based on price support resistance. And it is so much more than meets the eye. I'm talking about the 7 layers of support resistance, because if you're only focusing on supply and demand, you're missing out on 80% of technical analysis and other support resistance levels that are actually more important than the supply and demand levels. I'm also the designer of the specific trigger times. So we don't trade throughout the day at any time. We have precise trigger times when we strike. For instance, for the morning session, for the newer trading session, we have a set of trigger times that start from 9:32 a.m. And we end the trading session at 11:30. We also have specific price zones. We have 4 specific price zones that we focus on. These are the specific price zones where there are a lot of institutional traders that are seeing these zones as prone to buying or target areas, or even they use them for stop areas. Chart correlation, chart synchronicity, chart divergence. This is something that we take into consideration each and every single day when we come in front of the computer. And what I do on a day-to-day basis, I day trade futures and I swing trade stocks. This is what I do. So I focus by trading my futures trading for the first 2 hours in the morning, and this is what I do. Also, I'm the designer of a strict set of trading rules and a 10-point scoring system that enables myself and my trader for so many years to identify trades with these. If you want to get in touch with us, you can actually visit us on our social media. Facebook, Twitter, on YouTube, we do post a lot of videos, a lot of free information, a lot of free classes that you find there. A lot of information you can find on LinkedIn about myself, and also I am a contributor to a lot of financial media outlets, so make sure you visit that as well. And basically, when it comes to trading, this is what I trade. This is my trading universe when it comes to futures trading, and my focus for day trading is these indices. I only have 4 E-mini indices that I focus on, and that's the E-mini Dow, S&P 500, NASDAQ, Russell. And I have 2 commodities, and that's it, pretty much, gold, and I watch oil, and this is what I watch. So oil and gold right here. The rest of the panel that you see here, I'm focused for swing trading. In fact, I am in a swing trade long right now in wheat, and I am in copper long that is at a key location. So all in all, what do? I day trade futures and I swing trade stocks, and I also swing trade ETFs, and I swing commodities. So when it comes to my day trading, what do I focus on? So I make my life very easy, and this is my trading universe. I don't use a scanner for my day-to-day trading, for my day trading purposes. I don't use any sophisticated indicators. All I watch is price, and that keeps me focused for the rest of the day, and that keeps me focused for the first 2 hours in the morning, and I'm off. I'm done. The swing trades, I have alerts on, and I watch them throughout the day. I watch them through my mobile devices, so I am unchained from the computer. I literally can do whatever I want for the rest of the day. Well, there are days where you can expect follow through in the afternoon, and obviously I'm not going to let money lay on the table and for me not to be there to pick it up. So yeah, sometimes I do trade for the rest of the afternoon, but in the majority of cases, I trade for 2 hours and done, which was the case for today. Brings me to today's trade. Like I said, you don't have to have a lot of money in order to trade futures, and you don't need a lot of risk in order to trade futures. This is an example from our small trading challenge that we have launched at the beginning of the year. I'm going to show you the results. We have proven results. We have trades that we have tracked with exact entries, exact stops, and exact target areas, exact trail out areas, and exact results. This is a trade for today, like I've mentioned before, from our swing trading service, from our day trading service. And this is the method. These are the results that you can generate applying the method day in and day out. You have to wait patiently for these levels to set up. And actually, I missed the trade this morning because, and I literally didn't miss the trade, but it triggered and never came back down. So yeah, you could say I missed the trade. So I could have had a better day today. So this is from our small account challenge. This is not our actually like real big account result. This is to show you that you can do this with a $7,000 account, with a small account. These are the results that you can generate with that account if you know what you're doing, if you know the power of technical analysis. In fact, in this trade right here, we took it with one contract. You need a margin of less than $5,000 to trade one contract in NASDAQ. If you don't know what you're doing, you're going to be losing your money super fast in this fast-paced market, and especially in the futures market. But if you know what you're doing, these are the results that we are generating, and we're generating for our students. And this is actually $300 on this trade right here on a long. This is one trade that we took today. Okay, so without further ado, let me show you my results, right? The results for 2017, we put our money where our method is, and these trades were taken off our method. This is what we do on a day-to-day basis. We trade every single day for 2 hours and done and done. First quarter results, and as you can see, this is from a small account challenge. So you start the account with little over $5,000. In the first quarter, so January, February, and March, we've generated close to $4,000. $4,000. That is almost double the account in one quarter, guys. Almost double the account in one quarter. If you would have had a larger account, if you would have started with a $15,000 account, at the end of the first quarter, you would have had close to $10,000 in your account. Second quarter, this is February, March, April, $5,000. Again, restarted the account with $5,000. Keep it in mind, we are only trading here with one contract with our proven strategies and our institutional method. Okay, so $5,700, a little bit over that with a $5,000 account. In this quarter, again, double the account. So take a look at the results. Third quarter, not so strong. We had a very choppy market. We had a very unusual summer, to say the least, but we managed profits, $995. I take that any time of the day, anytime. I'm not in the red. I'm still green, which means that I'm still rolling and I'm still advancing. Also, with a $15,000 account, your profit for this quarter would have been $2,457. This is day trading, and this is swing trading as well. We had very little swing trades this year, and we've had very few swing trades this year, but we had a really nice winner that actually saved the quarter right here. We had $1,600 that we made in natural gas with one contract. So far, the total for this quarter, today is the end of the quarter, last trading day of September, we made $10,000, $675.50 so far. So start with a $5,000 account in January. Right now in October, you would have over $15,000 in your account because you have your account, your working capital, and you have your profit. And obviously right now you could switch to a $15,000 account and have these results moving forward. This is how you grow a small account. So on a $5,000 account, $10,000, $675, and $26,000 on a $15,000 account. And guys, this shows our consistency. Consistency is key. Once you have a method, once you have it pinned down, you have to do the same thing over and over and over again. Stop looking for indicators. Stop looking at anything else. Guys, I want this webinar to be an eye-opener. If you have a method that is generating you income, stay away from the noise and focus on your method. Focus on what you are doing and focus on the trades. Analyze your trades that are winners. Look what you did right. Look what you could have done in order to progress, in order to make a new trade a better trade, and go back to the drawing board and see what is working for you. All right, these are September results right here. We post the good, the bad, the ugly. As you can see, we have a very detailed record of all our trades right here. All these trades were taken before the market even hit the entry level, 5 to 10 minutes before that. So you can see it right here. For the quarter, we have transparent results. We've ended the quarter for the day trading with $115 in the hole, but guess what? Our swing trading results, $1,600. I take that. So it was a fantastic end of September for us because we are into the green. We have nothing to hide. These are all our trades with the trail outs, with the big winners, with the small winners. And as you can see right here, we don't have very large losers. Take a look at our winners, $400, $450, $300, and our losers, we won $250, we made $200, and then when we lose $100, we will lose $120, we lose $150, $100, $160. Our losers are small, and we know how to keep our losers in check in order to grow our account. Also, consistency is key. Like I said before, applying the same method on a day-to-day basis. This is what you need to be doing every single day to achieve the results that we are achieving and I am achieving in my trading account. Applying simple strategies. So go back to the drawing board, forget what was complicated, forget those very sophisticated indicators. I had clients that took my classes and then went back and then they said, oh, I found this indicator. They were actually running by me. And I said, no, don't deviate from the method. They spent their 2 to 3 months learning how to use that indicator. They haven't received any results from the indicator. And they came back to me. They said, it's not working. I started applying your method again and it's working again. So I'm never going to deviate again. So guess what, guys? Stop doing what you're doing right now. If you have a method that is working for you, go back to that method and see what happens. You could do your own introspection on your own trades. You could be your best critic and what you're doing right and what you're doing wrong, but you need to apply what you're doing. So apply simple strategies. This is what you are going to benefit from. Now, what is technical analysis, right? For a lot of you in here, there are a lot of new traders, and every single time when we host webinars and when we're invited to webinars, there are a lot of traders that are just starting their careers. And for those of you that are starting your careers, you're in the right place because the fact that you're here today shows that you are willing to learn how to do it right and to learn how to trade the right way. So technical analysis is the forecast of future price movement of an asset based on the examination of past price action movement. Technical analysis can help traders anticipate what is likely to happen to price over time. So mastering technical analysis is actually the key to unleashing big profits. Knowing where the happening places are, those supply and demand levels, including those 7 layers of support resistance. It is all there is. There's nothing sophisticated about this market. With the presence of more algorithms that are hitting the market, and they just hit the market right now, end of September, and they're going to be very active in the volatile fourth quarter. And the reality is that the fourth quarter is the most volatile. It has the most volume. It creates the most follow through for trades. So I'm very excited for the fourth quarter, because if you haven't made money in your first, second, or third quarter, guess what? Fourth quarter offers you the opportunity to make more money than you have ever made in these 3 quarters. It is that active. And my track records show that I'm right. I'm making most of my money in my fourth quarter. You can determine by technical analysis where you need to buy or where you need to sell or where you need to look for these key levels, your entry areas, where you place your stop, where you place your target. You can actually determine targets by looking at past price action. You can determine perfect entries. I'm going to show you an example for that. For the day, from yesterday's trading, actually a trade that we have communicated to our traders before the market opened at 9 o'clock Eastern time, and then the trade set up little after 9:30, 30 minutes later. We took amazing profits from that trade. I have that example for you right here. So the entire information is on the chart. You just need to know how to decipher it, okay? You just need to know how to decipher it. First of all, how many of you in here know how to read a trend? How many of you in here know that trends can be deceiving because you can have a downtrend on a small time frame, and you can have an uptrend on a larger time frame? It is so complicated. It's knowing how to put the elements together and know how to look at charts and how to look at multiple time frames. Multiple time frames is the way to go. One of the biggest mistakes traders make is that they focus on a 2-minute time frame. You could see it right here, 2 or 5 or whatever, and they focus on this 2 time frame and they don't look. They have like blinds on. They don't see what's going on the other time frames. Like, newsflash, guys, the price and the larger time frames is dictating what the price is doing on these small time frames. So if you're neglecting what the daily chart is doing and what the hourly chart is doing, then you don't know what the picture is on the 5-minute or the 2-minute chart. You have no idea. You're going to go against the trend. You're not going to go with the momentum. You're not going to go with the power of the move, whether to the upside or to the downside. A quick way to determine on which trend in which trend you're whatever you're trading, whether it's stocks or ETFs or currencies or currency pairs, whatever you may be trading, you can actually look on a 5 or a 15-minute chart. And if the price is residing above the 10 exponential moving average, and if the price is residing above the 20-period moving average, you're into an uptrend. Any pullback into these moving averages, any pullback into these key zones other than support resistance, because these are also considered support resistance levels, it represents a buying opportunity in an ongoing trend. But you need to know how to represent and how to interpret that. You need to see if you have a tradable void on the daily chart, if you have a tradable void on the hourly chart. You need to correlate all these time frames, because what if I want to take a trade here at 22,320, right? I have a support level, it is testing, it's getting ready to propel higher right here. But what if the hourly chart or the daily chart suggests that, you know what, this is a strong resistance area here? Are you still going to take that long? So these are answers that you're going to get only if you know how to apply technical analysis. And technical analysis is not hard. It sounds sophisticated when you hear advanced technical analysis skills. You need advanced technical analysis skills. The reason why you need advanced technical analysis skills, the reason why you need to know about technical analysis skills, is because when you're trading, guess what? You know who you're trading with or against. Portfolio managers, hedge funds, professional institutional traders. You're trading against algos. Algos don't think, they execute, and they execute based on these levels. Let's take a look at this chart right here. And this is a 1-hour chart of E-mini Dow. In the pre-market game plan yesterday, we've been analyzing this this index. Okay, this is what I do. I do futures. Okay, so I have been watching these levels. I have been watching the 22,250 level right here. Okay, and I was watching the psychology behind the move. Okay, so I want you to observe some areas on these charts that I have marked with the arrows. First off, we started the week on Sunday. This is the time right here, this Sunday. On Sunday, we had a rally and we have topped out. We have pivoted in this area, very close to 350 area, from which we started to descend in the London session. We started to pull in very, very hard in the New York trading session, and then we bounced back up slowly, right? We hit this high right here. We created this high. We pulled back. We created an equal high. Look at the psychology here. What happened last time when we hit this high right here, what happened? We got a 180 reversal right here that pushed the price back down into the same support area, right? What happened in the overnight trading session? Guys, it is a self-fulfilling prophecy. It is having your crystal ball, knowing how to identify support resistance areas and knowing how to identify them on the time frames where the majority of traders are looking for trades. And when I'm talking about the majority of traders, I'm not talking about the traders like me that are trading from home. No, I'm talking about institutions. I'm talking about institutional money flow. I'm talking about hedge funds. I'm talking about the big money. And I'm talking about the algorithms that are trading hundreds and thousands of dollars on every single trade. So you're looking here, and what is the psychology? All right, it revisited the prior high and neglected to make a new high. What is your reaction? As soon as you see some clues that are appearing on the chart, boom, you're shorting it. You're shorting it back into the bottom of this range. And then overnight, take a look at the overnight price action, boom, right here. What are you going to do at the open? Short it. Where? You're going to cover it here at 250. I don't care if it goes a little lower. I'm covering here my short at 250. And then what am I going to do at 250? Because what is the psychology here at 250? I'm going to buy it again, because every single time when we got a dip, and you know what these dips below these support levels are? These peakable lows right here. These are all the novice traders stopping out. And guess what? We're buying from them. We're buying from them because we know the psychology behind the candlestick, and we have advanced technical analysis skills to know that the price will rise into the approximate same area, okay? Into the approximate same area. What did we do yesterday? In the pre-market game plan, you could see the level right here, 22,250. Go to your charts. It went, I'm sorry, 22,240. It went exactly to our price. We mentioned 30 minutes, actually 35 minutes before the market opened, we mentioned the fact that we want to buy it at 40 and we want to sell it at 300 or 325. That is our ultimate target, 300 or 325. Guess what, guys? For a trader that has a small account but is educated and has invested in his education, because you cannot go anywhere without education, and learning just the strategy or learning just just let's say a simple technique of technical analysis is not going to get you anywhere. So I'm sorry for saying that, but guess what? That's reality. You need a complex system. You need a system that is going to tell you where you enter, where you place your stop, where your target is going to be, and guess what, guys? How you're going to manage that trade to achieve those results. How are you going to lock in profit along the way to your target so you don't risk your capital? How to put your stop at break even, so that's going to take an ease on your emotions, knowing that you're going to have a risk-free trade moving forward. These are the tweaks that you need to bring to the system, okay? So you need a complete system. In this trade, all the way from 40 to 300, our first target area, a lot of traders take our first target area, especially our beginner traders. Guess what, guys? If you have a $5,000, $7,000 account, and if you're trading this trade with us, and you know what we know and what we do, well, you just made 60 points. Congratulations, because that is $300. And guess what? That is in less than 1 hour. In less than 1 hour. Well, it was a little an hour and 15 minutes. Okay, not less than. Sorry about that. So yeah, I take that any day. Imagine if you have a larger account, right? You have a larger account. You can position size to that account. Now take a look at these bottoms right here. We've been analyzing the same trade every single time. These are pressure points, pressure point, pressure point. Remember this little bubble right here? These are all the stops. These are all the stops. All the novice traders that stopped out, boom, 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 boom. Guess what? Because they were shorting, this is what this tail is all about. They were shorting in this bullish area. And not only that, and this pressure point to the upside, these are shorts, and also these are traders that were stopping out. That's why you're getting the flurry, and that's why it dried out. You see that shadow of the candlestick that it's pushing the price higher, and the price went back up, right? The price went back up. Target areas. I mentioned before that target areas are set on charts, knowing what price action might do, right? So take a look. We said that our first target area is in 22,300 because that's a pressure point right here, over here. And we have a flat 200, pretty flat 200 right here. So we just wanted to take our 60 points and be done for the day, hit the beach, right? But guess what? If you're still in the trade, if you're managing, if you have a larger account, and if you still are interested in managing the trade, even if you have a small account, you lock in some profits and you let it go to the next target level. Our next target level is 22,200 to 22,325. It managed to make a high very close to 340-ish, and this was the next decision area. How do we know this is the next decision area? This is the next decision area. Well, because we have a prior high right here. Keep in mind that the left-hand side of the chart is going to give you clues on what the future is going to bring, but you need to know on what time frame to look in order to get a better entry on a smaller time frame. So all you need to do is correlate a larger time frame to a smaller time frame, and this is the finesse. This is where knowledge comes in, and this is how you're going to balance it. And once you know how to do this and you know how to master this, there's nothing that is going to stop you, because technical analysis is when it comes to trading, 90% of trading is, guess what? Technical analysis. That's what it is. And 10% is fundamental. Why do we need the fundamental? This is the news. This is keep in mind, a few days ago we had the tax reform, that came out. We had the speech about the tax reform. What did the market do? What did the market do? It propelled higher, right? It propelled higher. What was the best performer of that rally? Russell 2000. Russell 2000 has been an index that has been asleep for 10 months. 10 months, guys. 10 months was asleep. It just woke up. Beautiful breakout to the upside, and now is on the focus list because guess what? It has the possibility to move even further higher. Okay, we have to pay attention to fundamentals because technical analysis is nothing without this 10% of fundamentals. Fundamental is what will propel the move either to the upside or the downside. It's going to take it from that key level to the next level. That is what technical analysis is doing. So when it comes to technical analysis, it accurately pinpoints entry, stops, targets. Now, you saw my track record. Do I have wishy-washy entries? Do I have wishy-washy stops? Do I have wishy-washy target areas? No, for God's sakes, I have exact numbers. This is like math. You don't know how to calculate it. You don't know how to apply. You don't know how to apply the equation. You're done. You're done. You're gonna fail math. You're going to fail math. The same way is with trading. You have to have exact entries, exact stops, exact targets, and you get the confidence from trading and from technical analysis. Okay, so what is the entry? Let's talk a little bit about the entry. The entry strategy is the most important part of our trade. It is the only time when our trading capital is at risk. Well, yeah, that's true. That's why you need to pinpoint it exactly, because you're risking your hard-earned money, and especially if you have a small account. If you have a small account, you better make sure that your entries are accurate, okay? Because you have to know the location, and also you have to know the timing. Have you known, and did you guys know that there are certain times throughout the market when we expect reversals? If I get into a trade at 9:30 when the market opens, guess what? I'm going to be looking to take profits very close to 10 o'clock. And I'm just going to give you an example. Why at 10 o'clock? Because 10 o'clock is the first major reversal time that happens in the market. What do you do at 10 o'clock? You don't take trades, not unless there are breakouts or breakdowns, and then there are different strategies that you apply at 10 o'clock. But you don't initiate a trade. You don't. If you missed a trade, and if you had a rally that went from 9:30 or 9:35 or even 9:35 into 10 o'clock, within that period of time, you're not going to make trades. You're going to lock in profits as soon as you're getting that timed exit. And then you're going to wait for another trigger time. It is that precise, guys. It is that precise. You need to learn how to trade with the institutional traders. You need to learn how to trade with the algos. All right. So timing is everything. 10:30 is the trigger time. This is where it happened. It is a 180 rotation. It is a 180 rotation. Guess when it happened? Yesterday, guys. Yesterday at 3 o'clock. Okay, let's take a look at Russell. The power of technical analysis. This was a buy right here at 1480. This is a buy right here at 1480. We did mention it in our pre-market game plan. Take a look. 1480, boom. If you're not ready to hit the button at 1480 and to have your order in when it hits this entry with a very tight stop, I had a 2-point stop, and it went back up. It went back up and it made a high right here of 1490. 10 points, guys. Each point is 50 bucks. You do the math. The stop is a pre-planned exit. It protects your capital, and the stop needs to be placed at a key area. Stops are calculated based on strategic location. The target is the price that, if achieved, would result in a trader recognizing the best possible outcome of the trade. A winner trade, guys. Entry, stop, targets. It's as easy as that, but you have to know at which time frame to look at. Risk tolerance is very important when it comes to your account, which is different than position sizing. I'm pretty sure you know. What we mean by that. First of all, when we're talking about, hold on just a second because my slide just froze here. Okay, risk tolerance is very different than position sizing. If you have a small account, let's say up to $10,000 account, you can't really position size. You're forced to trading with one account. But if you have a larger account, let's say if you have a $20,000 account or a $50,000 account, you are going to position size for that. Your only variable is going to be the difference between your entry and your stop, and your risk size, your risk amount is going to be the same on every single trade. Okay, so if you're going to risk $300 on each trade, you're going to position size for $300. So that is the only constant. Your position size is going to be the only constant. But what happens if you have a larger account? Let's say you have a $70,000 account that will allow you to risk, let's say, $1,000 on each trade. But you can't tolerate seeing yourself losing, let's say, on a day-to-day basis. You're going to allow yourself to take 3 trades, and you can't really tolerate and digest the fact that you're going to be losing $3,000 on a day-to-day basis. Well, that means that your risk tolerance is lower, okay? So because your risk tolerance is lower, which is not a bad thing, because when it comes to trading, you have to find your comfort zone. Your comfort zone is key. So if you feel comfortable with risking only $500 a trade, that's what you should be doing. And you get great results, guys, and you can make a living risking $500 a trade. Okay, you can get fantastic results. Like, take a look at today. Today in NASDAQ, we had a 5-point stop. A 5-point stop. A 5-point stop is $100. Okay, a 5-point stop means $100. Right? And we had $300 win on the trade. $300, right, with one contract. If you had 5 contracts, which means $500 risk, this would have been a $1,500 a day for you. And this is for larger accounts. This is how you position size. And of course, I have an example here, a quick example, and you could see here that we have a risk of 3 points in gold right here. This is the breakdown, and this is one of the strategies that we have in our arsenal. And we have a risk of $300 with one contract. Keep in mind, we keep it very simple for all the beginner traders to understand how this market moves. And our reward was of $700. So the difference between the risk is the difference between your entry and your stop. So if your position sizing is of $600 per day, and this is what you're willing to risk on every single trade, but you're not going to risk $300 on a trade, and then you're going to go ahead and risk $500 on a trade, and then you're going to risk $100 on another trade. That is a recipe for maximum disaster. Maximum disaster. You have to risk the same amount on each and every single trade, and that's key. You need to trade with the institutional wave, and there's no doubt about it. You need to know the precise areas where institutional traders are getting in order for you to benefit from the flow. And this is the flow that you're getting. This is the flow that you're getting. This is institutional money distributing, okay? Here's another example, and these are all trades that we've done. Okay, and these are trades based on our proprietary method, which is super simple, Here we have a cluster. We have definite support, we have resistance. How many of you in here know that if we break above this resistance area, we're going to head higher? We're going to head higher. Of course. This is a cluster, a very tight cluster. Remember me telling you that if we don't have a reaction by 10 o'clock, we can expect a range? If we don't have follow through from 9:30 to 10 o'clock, then we have to sit on our hands until 10 o'clock because we may expect a pullback, right? A further pullback, and this area can be shortable, or this area can be bought right here over the high. There's an aggressive method where you can buy off these lows. We don't have enough time to talk about it right now, but there are ways that you can trade this, and these are all trades that we've done in our system. Now, overall, these are the results that we started this year. Keep it in mind, we started this year with $5,000. $5,000 we put on the line, and this is a small account. This is the brokerage sheet right here, $19,439. You can see it right here, and also $450 on this trade. This is YM once again. So keep it in mind, guys, when we have winners, we have winners. Okay, our losers are very small. You're not going to lose more than $200 based on our method. You're not going to lose more than $200 based on our method per trade. Okay, so we had it short, 21,890. We had a stop. Take a look at the stop, 21,920, very tight stop. And then we had target, 21,870, 21,850. Okay, we know how to calculate our target. These are the results, $450, and this is on 2 contracts. So you get the picture. If you're trading with only 1 contract right here, if you're trading with 1 contract, that is $225. What is wrong with $225 on a $5,000 account? That's incredible. That's incredible. Incredible profit. Take a look at NASDAQ right here. Quick chart of NASDAQ. You can see it right here. And this is also one of our proprietary strategies that we trade. Cluster breakdown. Beautiful short, 58.80. We know our areas. Keep it in mind, we have 4 price points at which we act. We don't act anywhere. If this price would have been at 65, we wouldn't have shorted at 65. Okay. So we have precise prices where we strike. 4 prices, that's what we look at, and these are proprietary to our method, including the trigger times. So we have trigger times throughout the morning. One of them is at 9:35, the other is at 9:45, then we have 10 o'clock, then we have 10:30, etc. So at each of these times that I have just mentioned, we're acting, we're looking for specific patterns. Okay, so we don't waste our time, we don't waste our money. We know how to select what to trade ahead of time because we base our strategy on relative strength and relative weakness. Today we were focused on NASDAQ. Why? Because it had relative strength. It was divergent compared to YM, E-mini Dow, which was weak. So we're going to go in a strong market with a strong index because it has odds of running higher, faster than the laggard. Okay, which makes sense, right? Makes perfect sense. So we shorted this. We made, our risk was 20 points. We made 40 points. $800 on 1 contract. Here's the YouTube video right here where we called the trade before it even happened, before the market even opened. Okay, this is delivered at 9 o'clock for our students only. And take a look. Okay, you could type it in, you could view the recording. All right, here's another example with 1 contract, $340. You saw the losers, right? I showed you the track record. I'm showing you some winners. I show you some losers. Okay, another trade, $230 on 1 contract based on a cluster breakdown, key time, key location. This is the follow through that you're getting. We're not just getting we're hitting the market exactly like algos. Our method is an algorithmic based method. Okay, algorithmic based method. This is why it works most of the time, and this is why our account is growing. If your account is stuck in a rut, then it's time for you to switch, and it's time for you to look for a different method or zoom and eliminate the noise that is in your trading right now. If you're in a chat room following someone else's trading plan without you having the proper education and putting your trust in that someone that may have or may not have a track record, it is a no-no. Okay, here's another example in silver, and this is with 1 contract, $550 on 1 contract, and actually this was a lunch fade right here. Our strategy is based on, like I've mentioned before, on precise locations. We focus on these exact locations because these are the happening places. These are the places where those institutional traders are going to line up. That's when they're going to bring their institutional money, and we are reading their footprints. We're carbon copying exactly their moves, and we're going with the wave. Don't you want to surf with the wave? How would it be if you're surfing against the wave? You're never going to come ahead, right? And we do it at precise times. Like I said, we are clockwise. When we start trading at 9 o'clock in the morning, I'm in front of the computer a little earlier than that. I'm doing my pre-market game plan. And at 9 o'clock, I'm done. At 9 o'clock, I sit back, I watch the market, I watch what it's doing. I probably have my orders in and I wait for my orders to be filled. I don't do any orders on market order. Maybe once a year I see a trade and I'm like, oh, I'm going to miss it. I'm going to hit the button. But all of my orders, 99.9% of my orders are pre-market orders, are limit orders. Our limit orders. When my trade gets triggered, then I place my stop. And all I do is just I sit and then I trail my trade. I love trailing. Trailing is an art, guys, and once you learn how to master trailing, and trailing is not hard, but it's part of the system. And you have to focus on these precise times. And you only focus 2 hours a day. The human brain cannot trade for a longer period of time. It gets tired. You're going to get burned out. You're going to get burned out. So your trading focus should be technical analysis based entry, stop, target. In order to be successful, ignore the rest of the indicators. There are a lot of indicators, and oh my gosh, do you think you have time to analyze RSI, stochastic, blah, 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 Bollinger Bands and whatsoever? You're going to have crowded charts. You're not going to be able to see, price action. You're not going to be able to see and to evaluate where your institutional traders are going to take you along with them for the ride. Okay? It's actually a very simple method if you know what to do. If you know what to do. So how amazing would be to know the best times to enter the trades, the locations, and the price ranges. How amazing would that be? If you didn't have to be glued to a chat room, and honestly, the chat room is just a companion because it's not going to help you in the end. If you don't have the education, and if you're in a chat room or a signal service or what have you, that's going to do you a disservice, and that's going to keep you from advancing in your trading. You have to do your own thinking. You have to be a self-sufficient trader. Don't let anyone take that away from you. You have to know what you're doing. If you want to be a professional trader, if you want to create and generate an income in the market, it's time for you to roll up your sleeve. I don't care where you're getting your education. Just get educated, because you need to know what you do. It might take you a year, 5 years, 10 years to do it on your own, but if you have the time and if you can afford the time, then get educated. This is the first thing that you need to do. Then you need to have access to an institutional trading system. You need to know how other traders, successful traders, are doing it, and they need to transfer you the know-how, not only the strategy, but how they find the strategy, how to enter the strategy, where to place the stop so you don't get stopped out, where to set the targets, and how to trail, how to protect your capital, and how to grow your capital, psychology, and so on and so forth. You need the complete system. If you have bits and pieces of the system, it's going to take you years before you put them together, and guess what? You're going to get the worst outcome. You're going to run out of capital. Okay, so reverse the learning curve and know your risk. Okay, so I get a lot of questions. Yeah, but you know what? Trading is risky. Is it really risky? Well, think about this. Driving is risky. Driving is risky. You don't know if there's going to be a drunk driver on the road that is going to hit you. Playing sports is risky. Okay, playing sports is very risky. What if you get kicked in the head? All right, when you're playing soccer or football or something. Okay, what if you are swimming in the ocean and get bit by a shark? Yeah, everything is risky. Okay, eating is risky. What if you choke? So if you look around, everything is risky. When you think about all these things, and when you think about trading, trading is like math. It's an exact science. It's coming to the point you're going to buy it. It's not coming to your point, you're not going to buy it. So what do you need to be consistent and start generating an income? Well, you need an institutional trading system. It is a trading system. It's not just a strategy, but it's a set of strategies. And it's a set that will guide you through the trade from the beginning of the trade until you get out of the trade. And not only that, but it continues because you need to analyze your trade and how you analyze your trade, how to trade within a specific quarter. Each quarter is different. Each quarter is different. So you have to know how to adjust trading each quarter. Now, I'm very aggressive in the fourth quarter. I have a fantastic track record for the fourth quarter. And I love trading the fourth quarter. You need the precision of execution. So you need the strategies. You need to know how to select what you trade. I only watch 6 charts, but how do I select what to trade on each day? You have to know how to do that on your own. You have to know your risk, how much to risk on any trade. You need a solid money management plan. You need a trailing technique. You need to know how to position size. You need psychology, and this system will enable you to identify where the money is. It'll tell you exactly the precise time when you need to hit the button, when you need to place the stop, where you need to place the stop so you don't get stopped out. It shows you the precise areas based on the 7 layers of support resistance and the 4 price locations where algos are going to hit. Algos represent close to 85% of the market value. Do you want to trade against them or do you want to trade with them? So keep in mind that technical analysis is much more than we spoke about in here today. So if you think that our free stuff is great, you can only imagine what we teach our traders. So if you want to join our team, you can send me an email and I'll send you more information about what we teach our students for you to be a self-sufficient trader, unleashed from a chat room, unleashed from any kind of signal service, unleashed, and for you to be able to trade on your own. Okay, to trade on your own. So our comprehensive trading course will teach you everything you need to know to become a successful trader in any market condition. We do offer live classes, only live classes. So you can ask us any question along the way. Unlimited live retakes. We have a manual that actually consists of 416 pages. I don't know of any education firm out there that is offering you the live class, is offering you the retakes, is offering you the recordings, is offering you a hand-holding system. It's not even typed here, but you're going to be taking my trades for the next 3 months and unlimited support. You know what unlimited support is? You're going to get to talk to me and my head trader at Trade Out Loud, us too. You're going to be talking not to an assistant, not to a customer service representative, but you're going to be talking to us. We have a brand new class. It is a 10-day power income day trading course that starts the end of October. Get ready to trade with us, October 23rd to 27th from 5 to 8 p.m. educational seminar, and you're going to be trading with us in a live trading lab from October 30th to November 3rd. What this is going to do for you, we're going to put everything together, and then you're going to be trading with us until the end of the year and make money. The course tuition is $7,995, but now you can get this for $4,995. We're waiving the trading lab fee, which is close to $3,000. We have just started a class. We're rolling into it. We have a lot of traders that are extremely happy. So email us if you have any questions or call us. Thanks so much for having me, Investor Inspiration. Guys, hope you have a great rest of the day and enjoy your weekend.